Well, I see it's 2:30. I'll get us started. Hi, my name is Elizabeth Butler, and I am the Director of Economic Development Strategic Directions at the Grand Haven, Spring Lake, and Ferrysburg Chamber of Commerce. I want to thank you for attending our webinar on this sunny Friday afternoon. The Chamber is proud to present to you this afternoon a webinar surrounding the year-end requirements for federal programs such as PPP and EIDL, as well as updates surrounding the new federal stimulus packages that were recently approved. Today we have with us Holly Blagg and Julie Oldham from the SBDC. Holly is the Associate State Director at the SBDC, and Julie is a business growth consultant. Both are very knowledgeable and great resources for you to have. All their contact information will be given to you during this presentation, so if you need further follow-up with them, you may do so. Before we get started, I want to recognize and thank our sponsors, both the SBDC and DeBoer Bauman and Company. This webinar would not be possible without both organizations. Before we dig into the year-end requirements and upcoming stimulus information, I want to introduce Steve Darrow from DeBoer Bauman and Company. Steve, would you like to say a few words?
Absolutely. Good afternoon, everyone. I'm Steve Darrow, partner from DeBoer Bauman and Company. Thanks for allowing us to sponsor this chamber event this afternoon. Wanted just to provide a real quick summary of who DeBoer Bauman and Company is. We're a full-service accounting firm with locations along the lakeshore. We're located in Grand Haven, Holland, and South Haven. We have several specialties and niches, including family-owned businesses, manufacturing and distribution, agricultural, and nonprofits. In addition to our accounting practice, we also have a financial services division. We're a forward-looking firm that works with our clients to create unique planning opportunities to achieve their unique goals. We're also part of the BDO Alliance, which is the 6th largest firm in the world. This allows our clients to have a local business contact or tax person. We'll also have the resources from a large worldwide CPA firm. So in case there's unique or complex international opportunities that arise, we can still assist with that. If you have any questions, feel free to let us know, as we're happy to assist. Thank you.
Well, thank you, Steve and DeBoer Bauman, for sponsoring this webinar. Before I give it over to Holly and Julie, I would like to review a few housekeeping rules. First of all, we're going to be utilizing the Q&A feature at the bottom of your screen. There will be time at the end of the webinar for question and answer. So as we go through the presentation, if you find you have questions, go ahead and enter in your question at the Q&A feature, and we will answer those at the end of the webinar. We want to make sure that we stay on track with the presentation that we're given to make sure you get the right content. And then we do want to answer your questions. And so if you find that we do not answer your question live, let's connect via email and get that answered at a later point. So feel free to email myself, Julie, or Holly your questions, and we will do our best to get an answer to you. And finally, we will be recording this webinar, so we'll be posting it on our chamber website at a future date. So if you need to view it again or share with somebody else, you may do so. So Holly, I'm going to give it over to you at this point.
Thank you, Elizabeth, so much. And we are so excited to be here today from the Michigan SBDC. If you haven't heard about us, we're basically a local resource to you out there when you have questions about small business. So it could range from anything to starting a business to growing a business. And in this case, we're going to be really focused on the financial side of business in our meeting today. Just kind of some fun stats I wanted to share with you all regarding the SBDC. And it's really around just the past year. And when COVID hit, just the impact that the SBDC had as we engaged with the small businesses out there. Some interesting stats is that in that first 3 months when COVID hit, our increased consulting requests went up 300%. We saw a 750% increase in our webinar attendees, and our traffic on our website increased 400%. So we became a very, I would say, trusted resource for people to come to us for questions about what's going on, how we can help them with their small business in this really, really, really challenging time. One of those people who have helped a ton of small businesses out there and is a tremendous asset for the SBDC, as well as probably one of the most amazing people I've ever met. We always have these great conversations, is Julie Oldman. And she's going to walk us through some really interesting facts and information. We're here for you. We're going to hold questions to the end because Julie has a lot of stuff, and likely it will get answered. And then when we get back to wrapping up, Julie, then I'll kind of jump back in and we'll do some Q&A. Sound good? Oh, Julie, I don't think we can hear you.
Oh, thank you, Holly. Thank you, Elizabeth and the Chamber. Steve, thank you very much for being here as well. And thank you to all the attendees and the businesses that have been faring this pandemic. I know it's not been easy. I have dealt with many companies the last few years, and it's been a real challenge. So hang in there. I know you're, we've got 2020. I made sure that I stayed up on December 31st to make sure 2020 ended because there's so many terrible days. But anyway, today we're going to have a brief overview of the CARES Act, or the Coronavirus Aid, Relief, Economic Security Act, and the Consolidated Appropriations Act of 2021, or the CAA, which deals primarily with the PPP and the EIDL, or Economic Injury Disaster Loan. I'm not going to be able to handle all of this, but I've pretty much taken information from some of the clients and the companies that have questions for me. So the first I'd like to talk about is getting ready for 2020 year end. So this would be the first PPP loan, or the Payroll Program Protection Loan. I've been telling all my clients, keep all your documents, whether you're a digital or hard copy person. Just make sure that every penny that you spend, whether it's the PPP or the EIDL loan, that you have a copy of it. So that includes bank statements, utility bills, your payroll 940, 941s, to make sure that you have a listing of all those. If you're a QuickBooks user or any accounting software, please notate in the memo field that it was either for the PPP or the EIDL loan. Run expense reports now, not 6 months from now, whatever. I mean, do it while it's fresh in your memory. Then you've got everything ready to go if you need to upload it for your Forgiven application. Again, track all your expenses, contact your payroll company if you need all that information, or run your own payroll report. I would suggest if you have a loan, a PPP loan of $150,000, that you contact your bank. Some of the banks are using their own portals. Others are having the Form 3508S, which I'll show momentarily for forgiveness forms. But make sure you get all that information ready to go. And majority of the firms or banks are having you upload those documents. Please verify your entries for the PPP and the EIDL loans as liabilities in QuickBooks or your accounting software. Too many companies that put it under other income or other expenses. It is classified as a liability, either current or long-term, until the loan is forgiven or paid off. So please make sure that you have that squared away. If not, contact your accountant or bookkeeper to make sure that that's done correctly. The other thing that I've been getting a lot of questions on is accruing interest for the EIDL loan. Remember, and I'll talk a little bit more about the EIDL loans for those that are not familiar with it momentarily, but for those that have received an EIDL loan, you must be accruing interest from the date of the deposit that you received the money that you will have to pay a year from whenever you receive that date. So that gives you a little brief overview of what you should start doing for your year end, and making sure that all your entries and everything is clarified and ready to go for 2020. So the next, what we're talking about, is going to move on to the CAA, or the Consolidated Appropriations Act, and take a look at the timeline. So Congress passed 5,593 pages. Did I say 5,593 pages that included a $284.5 billion in funding. So needless to say, obviously, we're not going to go through those whole. We're going to do the business provisions at this point in time. I did not include any of the individual tax provisions as far as unemployment or anything of that nature. And I did not include the $1 billion for the Smithsonian as well. So on December 21st, Congress approved it. December 27th, the President signed it. The Treasury has 10 days to draft regulations and issue applications. So next week, I just got news, and I have a slide on this about some of the allowing to apply for the PPP too. So there will be changes coming as usual for those that have lived through the PPP, the original loan. I kept saying to everybody, wait 5 seconds, it probably will change again. So we'll probably get some additional changes as we move along. So get prepared now. So who's eligible for the PPP2? So you're talking businesses, sole proprietors, self-employed individuals, and not-for-profits, including churches or faith-based institutions, chambers, visitors bureaus, as long as they have 300 or fewer employees and they do not receive more than 15% of the receipts from lobbying. I received questions on what constitutes lobbying. So we've not heard anything. We're waiting for clarification on that. So there are also the hard-hit industries, which the hospitality or the accommodation and food services are allowed. So the PP1 recipients have 300 or fewer employees, have or will use full amount of the PPP1 loan before the disbursement of the second draw. We'll have a 25% reduction in gross receipts, and we'll talk about gross receipts momentarily, in any 2020 quarter compared to the same quarter in 2019. So at this point in time, of course, SBA and Treasury will determine this, but we're looking at a calendar quarter, not a fiscal or 3-month period. So there's been a change in that you could also use annual receipts, which I'll talk about momentarily as well. So now start, again, getting your, get bank ready, run your reports from QuickBooks from one quarter to the next. If not, have your accountant or bookkeeper help you on that. What are gross receipts? Your sales and your products, services, interest and dividends, rents, royalties, fees, commissions, all reduced by returns and allowances. Please do not include your gross receipts of the first PPP loan. That is not included. Okay, so I had to do some changes last minute to this PowerPoint because the IFR, the interim final rule, that is a rule like the IRS has rules, accounting, FASB has rules. Well, the SBA has rules like SBA procedural notices and the interim final rule. So the other night they said, okay, because we're dealing with small businesses that may not do quarterly statements or have one quarter to the next quarter for 2019 and 2020, we will allow annual receipts from 2020 to 2019. Other questions I've gotten even from banks is like, wonder if you don't do that, what's going on? You know, who knows? You may get with your banker, they may allow sales tax receipts to help you to show you a decline if that's necessary. Again, tax reforms will help substantiate your decline in sales. So for those that had not received the first loan, they've expanded it. They can have 500 or fewer employees, been in operation since February 15th, eligible for 7A loans. The SBA has what they call a 7A loan and a 504B loan program. Just to let you know on that. So for those that the borrowers returned or all of it or part of a loan, they can go now back and reapply for the maximum amount available to them. And if you didn't receive a shuttered venue operator grant. So the venue operator grant is for what? Museums and theater, all those folks that have been shut down for ages, unfortunately. Currently, $15 billion has been allocated. The SBA will be administering these funds, and we're still waiting to hear from guidance from the SBA on that, and not the banks. So again, expanded eligibility for the 501c6 organizations. I think Congress liked footballs because we got the football leagues, the chambers of commerce, real estate boards, and boards of trade. And again, as far as there's limitations on the lobbying activities, which should be clarified hopefully soon. And we talked earlier about the NAICS code, the North American Industry Classification Code for hard-hit industries, which is 72. That's the hospitality industry. So instead of getting 2.5 as far as their calculations for payroll, they'll receive 3.5 for their calculations. So let's take a look at the list. Some of you may be on here, you know, hotels, casino hotels, bed and breakfast inns, RV parks, boarding houses, special food services, caterers, food trucks, drinking places, restaurants, full service restaurants, limited service restaurants, cafeterias, and snack and non-alcoholic beverage bars. So for the second draw, if you've already received the first PPP, they've again expanded it as far as any business concern, not-for-profit organization, housing cooperative, veterans, tribal business, self-employed, sole proprietors, independent contractors, and small agricultural cooperatives that meet the requirements. As mentioned before, not more than 300 employees. It's all geared for the smaller companies versus the larger companies. Has or will use a full amount of their first PPP loan. Again, as far as a 25% reduction in the gross receipts from 2019 to 2020. I've gotten questions on, do I use cash basis? Do I use accrual basis? Use your tax return as guidance unless we receive additional guidance from the SBA. And for those that were not in business, again, the 25% reduction could be to the fourth quarter of 2019 through any of the quarters in 2020. So if you're seasonal, then you have a 12-week period from February 15th of 2019 to February 15th of 2020. So if you're not in business during 2019, but was in business by 2020, you can compare your receipts in the first or second quarter of 2020 to the first quarter of 2020 to see if you qualify. And then not-for-profit entities can compare their gross receipts for the first, second, or third quarters to the same quarter of 2019. Again, it's so important to run your statements, get bank ready, because I don't know if any of you who are on the first go-round, the first tranche of funds was immediately consumed. Now they're saying possibly because the big businesses are not going to be allowed to take these loans and the cap is at $2 million, that we wouldn't run out of money as quickly as we did the first time around. However, I would just get ready, work on your books, get them going, and get ready to contact your bank if not already. Make sure you deal with your business banker and go to their portal and find out the steps to get ready to apply. The nice thing here, if you remember, the first tranche or the first PPP loans, they're very strict on the 8-week cover period, then they extended it to the 24 period. And so with the second draw, again, it all depends on you. There's some flexibility and that you're able to cut off the testing period before you have a reduction in your employees that may reduce the amount of forgiveness that's applicable to you. Again, keep track of your employee numbers or your FTEs. Documentation, I get questions on this. The documentation is going to be the same as for the first PPP loans. If you've already had one, you don't need additional documentation to substantiate payroll costs. You use your 2019 figures to determine the first draw and the second draw. And if your bank is the same, then hopefully they'll have all that information for you. So for loans over 150,000, you want to submit your revenue decline, any tax forms relevant to your decline. And then the keynote here is that you're not going to be submitting like all that documentation with the loan application, but it will be submitted on the or before the date of the borrower applies for loan forgiveness. So important to document everything and keep track of that, because better to do it while it's fresh in your mind versus how many months down the road. And you never know when the SBA will request an audit or the bank would request an audit. So here's the process. You as a company or borrower will submit the SBA form 2483 SD, and I'll show you momentarily an old 2483 just so that you understand what type of information that you'll be submitting. They will come out with it. They've not yet. Now remember, everything is subject to change, and they have the SBA and all that has until next week to provide all this information. So, the bank will provide all the information to the lender, support the calculation of the increase. So this is an old form now, but I just want to show you that, you're going to designate what your tax entity would be, whether it's a sole proprietor, so on and so forth, C Corp, S Corp, your legal name, your address, your EIN number, all that, your average monthly payroll, and obviously this will change because you've got either 2.5 or 3.5 on that number of employees, your owner name, and then you're going to go through these questions here, kind of a certification. So I know this is quick, but the forms will be coming out soon. So the other nice thing is that the forgiven PPP loans and expenses will be deductible. Yay! The accountants, the bankers, you name it, we're all lobbying to make sure that these expenses will be deductible. And the IRS said, hey, we can't do anything until Congress acts. Well, Congress actually acted upon it, which is good. The other nice thing is that Michigan has a rolling conformity with the IRS, so it follows the IRS rules. Now, if you have companies that are in different states, you want to make sure that you check with that state to see whether or not those expenses will be deductible or not. So overall, this is really good news, and that's something that we have been hoping for quite some time. Okay, moving on. Chinese-owned entities are ineligible for a second draw PPP loan. Now, just know that banks are going to be relying you as a borrower to certify and be responsible for these loans because, and there's a whole area of this on the IFR and all that. However, I'm not going to go into it, but there will be no enforcement act with respect to lenders. Bankruptcy will be able to apply for a PPE loan. However, will the banks allow this? We don't know. So I know that Congress is saying, hey, we want to make sure that all these companies, we want them to survive and thrive. Now, again, it will all depend on how the banks and who your banker is. Okay, so for the simplified application process for loans under $50,000, of course, you're going to do your calculations of how much loan that you're going to use after you've determined your eligibility. You'll submit a one-page application for forgiveness. You have the loan amount, the number of employees retained, how much of it will be spent on payroll. So again, retain your records, 4 years for employment, 3 years for the other, and again, documentation to substantiate the loss of revenue. So here's what a 3508S looks like for forgiveness. So these are for $50,000 or less, just to give you an idea. Now if you have a loan already of $50,000 or less, I would Google this form, and it's form, type in form, SBA form 3508S, pull this up if you've not already gone to the bank portal, just to kind of practice and see what information that you need so that you're ready to go to put it into the bank portal or present it to their banker, depending on if it's the bank or the micro lender or whomever. But you'll have your business name, again, your business address, your EIN number, your loan, PPP lender PPP number. And again, they should have this. Check your loan documentation for that information. The employees at the time of application, employees at the forgiveness application, and so on and so forth. So again, by signing below, you make the following representations and certifications on behalf of the borrower. So you're going to go through and kind of read through all that to make sure that you've got everything ready to go. So they've also expanded the definition of the forgivable costs. There's a lot of confusion the first time around. This time they've clarified payroll to include group life, disability, vision, or dental insurance, rent, covered secured loan interest, utilities, operating costs, including software, cloud computing, and accounting services, property damages that weren't included by insurance, supplier expenditures, PPP, or any renovations that you've had to complete in order to comply with the COVID federal health and safety guidelines. So as long as for the first PPP, you also will have to do the 60-40 allocation between payroll and non-payroll costs. And I always get the question, well, can I keep my people on unemployment and still get the PPP loan? No, this is the reason why they have the payroll protection program, is that they put you on your payroll, and that is what the loan funds are used for versus the unemployment. And I know it's hard for the restaurateurs, the state is still down. Why should we be paying these people for doing nothing? I get that. I understand that. And it's very challenging. But the intention of this PPP program is to put the payroll on your company books versus the state and unemployment. Schedule F for farmers. The Act includes specific provisions that allow farmers to report their income on Schedule F to qualify for the PPP loan based on their 2019 Schedule F, and that's similar to the Schedule C taxpayers. And I always get the question, how do the banks get paid? Well, they do get paid, and they did get a chunk of change in the first PPP round, and they will get paid again. Obviously the SBA will pay for the loans that are forgiven 100% or whatever the percentage is. But notice here, loans of less than $50,000, lesser than 50% of the loan principal, or $2,500. Also, your agent fees could include your accountants. So I know I've been down several accountant webinars, and some of the accountants did not charge you for the first time around. I certainly agree that they should be charging. They have a lot of services that they provide to you. So you may be receiving, the banks are going to be funding them with their fees as well. Okay, moving on to the economic injury disaster loan, EIDL. I know very different pronunciations on the acronym there. Originally, it was started, with major storms or droughts. Then the first go around was, oh my gosh, the website changed forever in a day. Every time a company was putting a loan in, whether it's March, April, May, the website changed again. So hopefully they've ironed all this out. My understanding that the applications for the EIDLs did open up yesterday. I did not go through all the way through it or hear anybody that had gone through it, so I'm not really quite sure what information that they will be asking for. I do know that they will make the loan determination based on your financials. They generally have a interest rate of 3.75 for companies. For not-for-profits, it's 2.75. I always get the question, what are the loans to be used for? The loans are to be used for working capital purposes, and you can't double dip. If you use the PPP loan for payroll, you cannot use the EIDL funds for the same payroll. So you want to make sure that you designate in your accounting software and your documentation the separation of the two. Again, you must keep records of how the money is spent, and you provide this to the SBA within 90 days after the loan is repaid. So obviously, the original, we had up to 30 years amortization on a lot of these loans. So please document as you go along versus waiting till the very end. The other good news is that the EIDL advance is no longer reduces the PPP loan forgiveness. And that was just really confusing and challenging earlier in the year. So it does not have to be repaid or anything of that nature. There is going to be the new EIDL advance, which I'll talk to you about in just a moment. So what do you do if you have forgiveness with EIDL already deducted? Get with your banker at this point in time and determine how the next steps are going to apply for that. Okay, so here's the new EIDL advance grant. Now, to qualify for this grant, you must be in a low-income community. Has it been clearly defined yet? No. Have you suffered an economic loss greater than 30% and employ not more than 300 employees? Again, we are waiting for guidance from the SBA on this. Okay, the employee retention tax credit or employee retention credit is excellent. The nice thing is that if you had a PPP loan, the original loan, you could not take advantage of this. However, you can take advantage of it for 2020. It's retroactive, and you can also, there's changes here for 2021. What I would strongly suggest is that you talk to your bookkeeper or your accountant or your payroll company to go through this to claim the credit. You have to determine what your eligibility is and determining your wages. Then you calculate the credit based on your qualified wages and then claim the benefit. Again, please contact your accountant or bookkeeper or your payroll company to have you help them with this. Other good news, yay! I know a lot of you that do have SBA loans, whether it's a 504B or 7A, did receive 6 months of the small debt relief program. And now you get 3 additional months beginning in February 2021. Now, a lot of my clients the banks were contacting them to say, hey, we automatically took care of your payment for that 6 months, okay? So, and also if those companies that need a new loan before October 1st, 6 months will be paid for as that time period as well. I capped at $9,000 a month. Again, my suggestion to you as far as companies, please get with your bank and make sure that your amortization schedule in QuickBooks or your accounting software matches what your bank has as well. And generally, from an accounting standpoint, again, get with your bookkeeper or your accountant as far as determining how that should be classified. But that is just really good news, and it helps a lot of companies out as well. So you have an additional 5 months, again, for the hard-hit industries, and those are the educational services, arts and entertainments, your hospitality, clothing, sporting goods, air transportation, sightseeing, motion picture and sound recording, broadcasting, rental and leasing, personal laundry services. As I said earlier, just an hour ago, I just read that the PPP lending portal opened January 11th. The SBA announced today that they will reopen the week of January 11th for new borrowers and certain existing PPP borrowers. So the first round will be on Monday, January 11th. The second will be on January 13th and open to all participating lending shortly thereafter. Now they will open it up to smaller micro lenders prior to the larger lenders. So that's why it's just really important that you get all your documentation ready to go, get your accounting ready to go, get with your accountant, and then be ready to apply when the portals open up, and talk to your bank to find out when they're opening it up. Whew, that was a lot of information in a short amount of time. Just again, as a summary, again, we have the CCA as far as your eligibility for the 501c6 are now eligible. The second draw loans are 2 million capped. The restrictions are less than 300 employees rather, and 25% decrease quarterly or annual revenue. Again, you have the hospitalities, which is expanded to 3.5 months of eligible payroll. And then you have a coverage period that's flexible between 8 and 24 weeks. Again, your forgiveness cost now includes property damages, PPP, and supplier costs. The offset to the EIDL grants no longer reduces loan forgiveness. Again, you have simplified applications for loans of 75 to 150,000. Bankruptcy is allowed with administrative claim treatment. And again, the SBA has until like next week to pull all this together. So I know it's a lot of information and can be kind of crazy at times. Again, ask your accountant or DeBoer, Bowman and Company, or call Steve. I'm sure you got enough people along with, gosh, BDO. I didn't realize that the BDO's on Parson as well. Or contact us, the Small Business Development Center, the SBDC. We're here to support you in any way that we can. And I really want to thank you for the pleasure of your time, and I will turn it over to Holly.
All right, thank you, Julie. Wow, lots of great information. Let me get my video back on. We actually have a couple of questions in the queue, but once we get through those, maybe we can open it up for folks to kind of raise their hand and ask some more questions. But we have two. Our first question is related to nonprofits. Is donations or government grants considered gross receipts?
It's a good question. I don't know if, it depends on how you have your accounting. Is Steve on the line still? Steve, what are your thoughts on that?
Yeah.
I'm not sure on the answer to the nonprofits. I can ask one of our nonprofit people and circle back with you though.
Yeah, it all depends on how you know, sometimes even with like the PPP loans, if you determine that you're going to have it as a grant or you're going to consider it as debt on your books. So, and what your intent of the not-for-profit is, and what is your, you know, how do you get your receipts, your grocery receipts in? You know, is it membership, or, you know, how do you handle that? So generally, based on what the for-profit is, I would, they said do not include it in their gross receipts as far as your grant or the PPP. So, you know, I would kind of side with that ruling. Again, everything's subject to change, but right now that's my thoughts on that.
All right, so when we get some more clarity on that from Steve and Julie's review, then we'll make sure we get that answer out back to Elizabeth so she can get it out to you participants. Our next question is, does participating in the UIA's work share program prohibit participation in the PPP program, as we are paying the majority portion of the employee wages?
Oh, excellent question. Go ahead, Steve. It looks like you had ready.
Oh, yeah, we've dug into that for a couple other clients, so it doesn't. You just have to make sure you're not double dipping on the wages, but you're allowed to participate in both.
Wonderful.
Yeah.
So that's all that we have for our questions that are in our Q&A, but I'd like to open it up to make sure that folks who want to maybe raise their hand and participate in that way, you can do that, or continue to post the questions in the Q&A, and we'll be sure to get those answered.
Do we know who's on the line? What type of industries are on the, are we hospitality or businesses, or do we have a, do we know?
It's a wide
Elizabeth,
range
or?
of people.
Okay. I just was wondering if I covered, because of the variety of businesses available out there. No other questions?
None in our chat or our Q&A, and I don't see any hands raised, but I just...
Another one just popped up, it looks like.
Okay, what do we got? All right, does having an EIDL restrict you from getting a PPP loan?
I'm sorry, say that again, please.
Does having like an EIDL loan restrict you from getting a PPP loan?
No, you can still get both the EIDL loan and the PPP loan, as long as you're not double dipping for the expenses. If you use pay certain time period for payroll for the PPP loan, you can't use the same time period for the EIDL loan. You have to be separate on that.
Yeah, it seems like it's been like a common theme, right, Julie, that anywhere, no double dipping wherever you're at, right? So whether it's within federal spaces and grants and assistance, or even maybe state, it doesn't seem like that seems like a common theme, that no double dipping.
Yes,
Okay.
that's very true.
All right, our next question is, you said loans are deductible. That doesn't make sense to me. Do you mean that the revenue is not recognizable for taxes, or do we recognize it and subtract related expenses?
I'm not quite sure. You mean the loan or the interest expense? Are they, I don't understand. Are you talking like the PPP loan, or are you talking?
I think what they were asking originally was the way PPP was originally written was the expenses for the PPP loans were not deductible. So now basically you're allowed to take the deduction for it, and the income for forgiveness isn't taxable as well. So basically you have an M1 adjustment on your tax return for that. So it's basically income on the books, not on the tax return.
So yeah, for those that are not accounting, you can have difference in numbers between what your books say and versus what your taxes say. So for us accountants, what we need to do is say, okay, here's what the books say, and here's that figure, and here's what the tax returns say. So how do we reconcile this so that that equals out? So that's what the M1 adjustment is.
All right, and
I do have a question that was emailed to me. I'll read it to you. So this member said, I received a small PPP loan amount and I did use the funds by 12/31/2020, but of the 8 or 24 weeks you were supposed to use the funds within, I only used funds 60/40 rule in one of those weeks as I was closed for 6 months. I have not been able to get anyone to let me know if there will be any consideration for a situation like this. Does that make sense?
Gosh, that's a good question. Well, what I'm hearing is that for the whole loan, they're only saying 1 week covered the 60/40. So what did she spend the other amount on non-payroll? I'm wondering, what would you think, Steve?
Oh, there's also an exception out there that the business was forced to be closed by the government or local order, that you were exempt from some of that stuff. So I think if you look at the check box for some of those applications for the SBA, there was a box to check, I believe, out there. Depending on the application, it was a different page number. It allowed you to basically say that we were closed, we were not allowed to be open, and you were allowed to get out of it that way, I believe.
Okay, yes, I believe she was forced to be closed.
Okay.
Thank you, Elizabeth.
Good
Do we have
question.
any other questions on mail that were sent?
The only other question that I have gotten in the past is, when should I apply for forgiveness?
That's a good question. If you're under 50,000, the banks are available to apply for use the form SBA 3508S. Isn't simple. Then I would, continue to do so. For loans higher than that, please wait for the simplification of 150,000 or less. Now, for loans, greater than amount, obviously you're going to have to apply within that 10-month period of filing the 3508 EZ or the 3508 form, depending on your loan amount and the necessity questionnaire. I don't know. Does that sound about right, Steve?
Correct. Yep.
We got another question in our Q&A chat, and that is, when do you expect the rules and regs for the entertainment business to be released?
Oh gosh, should have been yesterday, years ago. I feel for those, I love the theater. I just feel for all those folks that have not been able to work for so many months. I just hope Congress or whomever doesn't drag their feet, or the SBA, and let's get things rolling.
There was one nice little feature that was in the bill for 2021 and 2022 that any meals incurred for business are 100% deductible, not 50%, but it's just a short-term thing to try to help the restaurant industry. So that's gonna be a nice little add-on or tack on at least 2 years.
Yes, I agree. It's, yeah, 100% deduct, business lunches and all that. That's wonderful. I agree, 100%.
Great. Our next question is there any conversation about EIDL loans maybe to be forgiven? Like, is that going to be under consideration, similar, I'm guessing, to the PPP?
No, and I get that question quite a bit. And make sure that you review your contract that was sent. And I know it's very difficult for the EIDL loans that were first, starting in March of last year all the way through. And especially if you're going to buy or sell a business, there's rules on that too, as well. And transferring it, just read the contract, read the loan agreement, I should say, with the SBA as far as what you can and can't do, and when their payments are going to be made, what your interest is, accrue your interest. A lot of companies thinking, well, I don't have to pay interest. No, you have to pay interest starting the date of the deposit. So. Steve, do you have any additions to that?
No, I think you hit it right there.
All right.
Any other questions?
No more questions in our Q&A. Elizabeth, what about you? Any questions in email?
No more questions that I'm seeing through email. So I can't thank you guys enough. Holly, Julie, and Steve, you've been a wealth of information. And I know that as we roll this out to even more people and let them view this, it's going to be very valuable for our community. So thank you very much. Thank you, Steve, and Deborah Baumann for sponsoring our webinar. Also, the SBDC, we really appreciate your time. Again, if you have other questions, please feel free to reach out to myself, Julie, or Holly. My email can be found on the Chamber's website. Again, Elizabeth Butler, Director of Economic Development. And yeah, good luck, everybody. I know it's crazy out there. So thank you, Julie, for trying to help us make sense of this. And
thank you for having us. We really enjoyed it. Thank you.
okay. Bye, everyone.
Bye.